Is going on, everybody? Welcome into another edition of the Daily Energy Newsbeat Stand-Up here on this gorgeous Tuesday, July 4th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsbeat.com, Stuart Turley. Happy 4th of July, my man.
Happy 4th of July. I got to hand it. The more I read, the more I'm impressed with our founding fathers declaring independence. They were some smart dudes.
Yeah, they were some smart dudes. We hope you're having a relaxing July 4th. Hopefully it was work free. Hopefully you've got some grilling, some hot dogs, some friends, some family. So we appreciate all of our listeners and we hope you have a happy 4th. Nonetheless, though, we will always be working for you, the fan. We have a great menu lined up today. The stories never sleep, and neither do we. So first up, oil, EVs, and big tech hit the ground running in the second half. Next up, 2022 inflation has silver lining for midstreams and MLPs. Next up, don't forget about 1980, folks. Inflation is not gone. We'll fly over to Russia and talk about Russia's rusty oil tanker fleet set sail with newer ships. Ooh, interesting. And then finally, most U.S. regions get D+ or below for transmission planning development, according to new benchmark report. Not good. Stu will then kick it over to me. I'll cover briefly what happened in today's half day of trading, and then quickly cover what Saudi's expected to do with their selling price to Asia and what they're expecting out there. And then we'll let you get out of here and continue to enjoy your fourth, guys. But first, all the stories you're about to hear are courtesy of the world's greatest website, www.energynewsbeat.com. The best place for all of your energy news. Stu does a great job of curating that website. Stays up to speed with all the stuff you need, even on the 4th. Dashboard.energynewsbeat.com, the best place for all of your oil and gas data needs. Get that while you still can. Go email us questions at energynewsbeat.com. But all right, Stu, where do you want to begin today's show?
Well, let's start with oil, EVs, big tech hit the ground running in the second half. Michael, this has got a lot of stuff you like in it, and that's finance and numbers. That's where you just kind of like hang out. I know you read numbers and then go to bed. Most of us get it, our heads scramble, but you love it. Okay, let's start with electric vehicle. Rivian at up 2.1% and Lucid up 1.7%. The crypto exposed stocks also rose in pre-market as Bitcoin hovers closely around the 30,000 level. I don't own any Bitcoin. Do you, Michael?
No, I have a little bit of Ethereum, but not much.
Well, I love this article when it says investors are tempering expectations for stocks after unexpectedly strong first half. Mm-hmm. So the banks is a big sign in question. Are they going to fold? How do they react? How does the Fed react? Is stuff that's not in this article. And so stocks, this is a quote from Nicholas. Why do we always have somebody's name I can't pronounce? This one is Pangitsagulu, a market strategist for JP Morgan. JP Morgan and Chase company. Stocks have done well the first half of the year because U.S. recession didn't happen, said Nicholas. Moreover, he added, the tech trade has turned into a pain trade for institutional investors, causing them to capitulate. The first back half creates vulnerable for the second half, as it means U.S. recession happens. There would be an abrupt market repricing. What are you thinking on that one?
Well, I think what they're saying is, considering what the Fed has done, we've raised rates over 110 basis points.
Right.
Considering that, the market has held up fairly strong. And considering companies like you mentioned, Rivian and Lucid, electric car companies who basically don't have a product. I mean, they just don't have a car. Right. You can't really, it's hard to go out and buy those cars. They're not affordable. Give Elon Musk this. You go out and buy a Tesla. You can go on the website right now, and in as quick as you can say Tesla, you can buy a car. It's kind of crazy.
And boy, they jammed them out. What, over 460,000? They set a record.
Yeah. Yep,
How cool is
exactly.
that?
You know, Tesla's over $900 a share. I think it comes down to, and I believe this, and I believe this is exactly what our buddy over at JP Morgan is saying, is that doesn't necessarily give us good. It doesn't, that sentiment of, hey, it was supposed to be bad, but it was actually good. That's going to lead us to whatever your sentiment was for second half 2023. You should probably temper them a little bit, because the pain that was expected wasn't necessarily here. Exactly. If there's this repricing that's due and it was supposed to happen in the first half, well, guess what? That means it should be coming in the second half. So it'll be interesting to see how some of these larger institutions decide to play. Again, tying this back into oil. Oil stocks are going to go as oil prices go. I mean, that's
Right.
fairly clear.
Yep.
Sitting here at $70, I think that bodes well for the larger oil and gas community. I do think if you could see that move 75, 80, you might be able to see, you'd continue to see those stocks rise. But those stocks are continuing to sit. Those EV stocks, the big tech stocks, those high leveraged, high debt stocks, they're going to go as the economy goes. So it'll be very interesting to see how things play out.
All right, let me throw these at you here. Here's some numbers in the lower in this article I love. Let's see here. Brent, let's see, currently WTI and Brent. Give those numbers for me as we're doing this. Saudi press agency reports that Saudi will extend the voluntary cut of 1 million barrels per day for an additional month through August. Russian Deputy Minister Novak says that he will reduce the oil supply in August by 500,000 barrels a day, cutting exports to the global market. Iraq's June oil exports averaged 3.3 million barrels per day. Remember, we had an article a little while ago. Their target's 6.2.
Yep.
Holy smokes. Kuwait has put out the fire at the Al Zor. Boy, that's kind of nice. There's a little bit of pollution going on. That's not good.
600. Yeah. Woo.
All right. So what do you think, oil? You got some more cuts coming. Do you think that that's going to help increase the price there?
Yeah, but I mean, you also have to think you missed. Read the next bullet point down, Stu.
Gold?
The next bullet point on Indian refiners.
Oh, yeah.
Indian refiners have reportedly began paying yuan for some Russian crude imports via our friends over at Reuters. The IOC was the first state refiner to use yuan for such payments. So that, I think, is the most important thing out of all these bullet points, is you're seeing the transition from the dollar to other forms of payment. As we talked about yesterday, BRICS will be meeting to decide what's next. So, I mean, it's scary stuff around the morning, but I do think that oil stocks, if you're bullish on oil, you should be bullish on oil stocks. It doesn't take a genius to tell you that, but that's the whole thing that I mean, it is what it is. Sue me. What's next?
Okay. Let's see. 2022's inflation has a silver lining for midstream MLPs. You got some funny things on this one. Oil pipeline index sees highest rate increase ever. Most pipeline companies have some exposure to the FERC index. Companies could generate incremental margin, but windfall profits are unlikely. Let's get into some of this stuff here, Michael, and I want to ask your stuff on midstream. Midstream companies, InLink and others, actually are a good, solid, hard, because that's hard currency having that pipe in the ground. I mean, those are, but the master limited partners, that's a different kind of beast that you don't like.
Well, I mean, I think master limited partnerships are crime syndicates, but we don't need to necessarily get into that. I think they're scams. I think they're.
Say that?
Well, because you have a general partner and then all your investors are limited partners. And so you can basically, the general partner has very little equity in the business, and has all the control. It's a tax haven. So everybody who's getting into it is just interested in tax deductions. I mean, we like tax deductions, but this is on a different scale. And distributions are, it's very similar to how like imagine a real estate or an oil and gas syndication. Imagine the way those operate, where you invest money, you're a limited partner, and then you get distributions. That's how MLPs work. Now, imagine that on a 100,000 times scale of your classic $5 million real estate syndication. Now, your general partner has basically zero stake in the game, has a fee structure that'll make you want to puke your brains out. And there's very little upside, especially in a public company, because what are you going to do if you're Enbridge? Who are you going to sell to? Who are you going to merge to? No one's going to do that. So again, I think I would avoid MLPs if you're an investor going out on the open market. We don't give an investment advice here, but I would avoid them like the plague. MLPs, or I call them crime syndicates. But tell me about them. We got here the oil price index, which is tell me what this oil price index is.
Yeah, let me read the bottom line here. The inflation protection built into midstream contracts and their fee mechanisms, which you love, is beneficial for the space. Companies can potentially enjoy incremental margin if the higher revenues more than offset rising costs. But the record high ceiling rate increase this year is not likely to result in windfall profits. So it sounds like a steady investment with very little upside. Is that what that described?
Yeah, so I mean, it looks like this oil pipeline index is basically the annual maximum rate increase for select pipelines. So you can't just absolutely slaughter your people that you were buying from, which is interesting because the reason why these crime syndicates exist is because it's so hard to build new pipelines. Stu pointed out before the show. I mean, these people they've got physical infrastructure. They own pipelines, and at least there's something tangible there. Now, the problem is we need more of these pipelines. We need more non-MLP midstream companies. We need, and the problem is they're all in bed with each other. It's really the midstream business is the cartel of companies attempting to drive the price and the fee structure up in order to choke. I mean, I'm serious. Go ask anybody in West Texas. They'll tell you everyone hates midstream.
Gotta love it. Let's go get us a midstream company.
Yeah, I'm good. I'm out of the crime syndicates. What's next? Let's talk about inflation. Great.
Oh yeah, let's go to inflation. And the picture on the article is a bomb. You gotta love it. Do not forget 1980. Inflation is not gone. Quite honestly, the Biden administration could not sell themselves out of a paper bag full of poo. They couldn't even set it on fire and throw it on somebody's doorstep. You know how that old joke goes, nobody would step it out because they'd realize it was from the Biden administration. The economic and financial puzzle has far more pieces to it than people think. It's difficult to understand the market short term, let alone any kind of picture for the long term. Here's where it gets a little funny. This is why forgetting 1980 could be a big mistake. Higher interest rates are a key tool, or what shall we say, weapon in controlling inflation, if needed to fight high inflation. I picked this article because there's a lot of information in here, Michael, and I firmly believe that the Fed is incompetent and is not capable of curbing inflation. What are your thoughts?
Well, because they only have they're so limited by the tools they have. All they can do is adjust the federal funds rate. They can't really do. I mean, they've created this mess by quantitative easing. So let's just remember that they did get us here. But that's really the only. They have to invent tools. So I mean, yes, the Fed is killing us. It's going to take some pretty intense financial engineering to figure out how to get out of this mess. But the first step is the Fed has to be disincentivized from wanting to pound the economy, because that's what they want to do. They raise rates in order to increase the unemployment rate. It shouldn't be one of their mandates, in my opinion.
You're dead on right. And I have said this before on this podcast. The only way that you're going to solve inflation in the US to get money back in is solve the energy policies. If you solve the energy policies, lower the interest rate, you'll stimulate businesses. Get out of the way of our great oil and gas, get out of the way of our nuclear, get out of the way of our renewables. I mean, even the permitting for renewables is crazy. I mean, they're killing the energy industry. Michael, what does it take to make anything?
I mean, years. It takes years to get
Right.
any sort of project permit. So I'm with you. There's,
If
when you are right. When you talk about inflation, it does, a large chunk of it does come back to, they want to make
and
our current energy production much more expensive to try to force us into something that doesn't exist. So of course we're going to experience inflation.
oh, I agree, but if anybody understands economics, I want to talk to you. If anybody has a better idea in a way that I can articulate it really simply, contact us. I want you on a podcast. I want somebody to tell me if there's a better way to stop inflation. Thanks.
Quantitative easing.
Quantitative easing. Just so, okay, we solved that problem. Next.
Solve that problem. What's next?
Okay. Russia's rusty oil tanker fleet set sail with newer ships. Oh, great. The dark fleet's getting upgraded.
We can't go. It's been about 2 weeks and we've talked about the dark fleet.
Okay. In all of our discussions, and both of our fans are out there and they're tired of me talking about the dark fleet, but the dark fleet has got some things going on for it. They sold off, a lot of companies have sold off their older tankers. There are some ESG, not so friendly old tankers cruising around the world right now, going between Russia, China, India. They are a Exxon Valdez waiting to happen. And so now they're buying some new ones. Safety concerns. This is out of the article, said Rebecca Guanalupus Jones, a senior analyst at Vessels Value. Safety concerns surrounding our older vessels is one of the reasons that buyers are opting for newer vessels. Boy, that sure makes a difference. One characteristic of a ship being part of the dark fleet fell to 15 years. As recently as October, it was 19 years.
Wow.
That's huge. 5 years makes a difference on an old ratty boat.
Oh yeah, and I mean from the technology, from the safety, from everything. So hey, if we're gonna have a dark fleet, they might as well be advanced.
I thought you would. Oh, hell yeah. I figured you would love this quote. Anup Singh, he is a global head of shipping research at Oil Brokerage Limited. Some ship owners are getting more comfortable with handling restricted crude, such as Russian flows, as they see that this trade is here to stay. Oh, I could have told them that. So they're now more willing to invest in younger ships that will meet wider industry standards for long. Mike, can I call you Mike?
Sure.
Okay, instead of Michael. I've called you Michael for 3 years, and it's like I called you Mike. Okay, now you have the Rush sanctions weaponized against Russia. That caused the dark fleet. Then the weaponization against the dollar has then caused BRICS.
Yep.
So then you're now spinning around. This whole thing is permanent.
Yep.
There is permanent damage to the oil market that we're about to see some crazy crap coming around the corner.
Yeah, I mean, you're talking about, earnings for these new tankers up over $100,000 a day, and that's up from 23,000. I mean, since 2017, but you have to talk about, it's been a while. These ships have been upgrading slowly but surely. So,
and this is all around insurance.
Yes.
And insurance is a huge part of the oil trade. We've talked about on the show before, a lot of the insurance for markets is in the UK. And so in the UK, everybody's going to the dark fleet. there's a lot of new markets for insurance companies. And then you have the China and India that are starting to insure their own boats. Wow. The whole insurance thing has changed. None of that is in these kind of, I love
No,
this one.
it's
The old
pretty.
pot of old bangers is running dry, so a natural progression to that newer ships will be taken. What's an old pot banger? Okay.
I don't know. That sounds like somebody exactly a tanker broker would say that. What's next?
Let's go to the next one here. Most you Michael, this one's kind of frightening a little bit. Most US restrictions get a D plus or below for transmission planning, development, and benchmark in the report. Congestion is rising. Delays and cost for interconnecting new project are increasing, and very little new high capacity transmission is being built. The report released Wednesday said.
Ooh.
Read this one. California and Midwest are leading the U.S. regions for transmission planning and development, partly because they consider future generation and load in their plans. The Southwest received an F, the worst grade. Hey, producer, could you fly in that flag for our video? There's a map of the US, and you could see the Northwest through the northern grid is D. Southwest Connect is a D minus. California got a B. I wonder who paid off. What Gavin must have.
I was going to say, somebody, where's Americans for Clean Energy? They've got to be based in California. Let's go find out. I'm going to go find out. Keep talking.
Gavin Newsom took a shower, got all the oil out of his hair, and they're burning that for fuel for the summer. So that's how they got to that. Okay. Texas ERCOT got a D plus. Are you surprised?
Yeah. They're out of DC. Okay, go ahead.
Right. And then Plains got a C plus. Midwest Mizzo got a B. New England got a D plus, and that's where our national treasure Meredith Angwin is. She's up there, and they got that one nuke up there. Those people are nuts trying to manage their place. New York got a C plus. I know for a fact that should be a D minus. So now here's one that's funny. Florida, the Southwest, Southeast region, F. What
does that mean?
It means run away.
We literally can't plug anything in.
Oh no, it's a disaster. And here's part of the problem with that, Michael, is because the number of people moving to that area from the rest of the country is causing problems. You can't have that big of a roll through on that. Congestion is rising, delays and cost for interconnecting new projects are increasing. That goes back to our previous conversation about 2.5 seconds ago. Permitting. Oh yeah. Okay, great. I just said it again. Permitting. Well, that's it for me, dude. We're going to get everybody out on a 4th of July. We're going to go blow something up, and we are not going to smoke any firecrackers.
No, I don't trust people who will not be smoking firecrackers. We had a half day of trading here today. We're sitting about 70-12. Nothing really happened though. Natural gas dropped to $2.70. We will be back at it tomorrow, guys. So we appreciate you checking us out. We hope everybody has a great 4th of July. Don't smoke any firecrackers, as Stu said. And we'll see you guys tomorrow. Thanks for checking us out.